So friends, inflation is like a silent thief. Every year, it quietly erodes the purchasing power of your money. I was going through a simple cost analysis a while back for another video of mine and came to know what you could have buy for $1 in 1971 would cost you nearly 7 times more today. If you're not investing, for sure you are actually losing your money. Now this comparison is done for the US market, however it is completely true for other countries as well. In fact, worse in most of the cases. When discussing key indicators for inflation, I won't focus on how much bread or fuel costs. Instead, I'll focus on the assets and big ticket items. While the cost of groceries and everyday commodities will certainly continue to rise, the real long term impact is felt with big ticket items such as real estate, vehicles, and education. And education, I'm talking about higher education at this point of time. These are the areas where the inflation can significantly erode purchasing power over time. Now, there is one important thing I would like to call out. There is one newsletter I send every week. It's about personal finance, productivity, real estate, different kind of life experiences that I'm having. I send this newsletter every week, so please do try subscribing. And if you don't like the newsletter, unsubscribing is always free. I hope you find the value in that. So this is the table comparing some household income with the other asset classes. So I'll just give you an idea. This table will have median household income, median house prices, average new car price, and public university fee for an average of 1 year. In 1971, the median household income in the US was around $10,290. Median house price at that time was $25,200. Average new car price was around $3,918. Public university fee was around $394. This blew my mind actually. Currently, it's tens of thousands of dollars in some cases. Of course, this is public university, so it's not about international students. When we talk about, let's say, being an expat, if we want to send some of our kids to the universities in the US, it will cost a lot more than this. This was, in any case, in 1971, and this is for local universities and the students who are coming from the same state. Now, let's talk about in 2019 what happened during that time. In 2019, the same median household income, which was 10,290, it came to be around $68,703. Now, this is important to note that the median household income that we are talking about in 1971 was mostly single earner, I would say single person who is earning for the family. While in 2019, the trend has changed, and most of the time, both the partners in the house are working. So you can imagine in 1971, the cost, like this income was brought at home by the single earner, and 2019 it was dual income household, most of the cases. Now, medium house price in 2019 was standing at $258,000. Average new car price in 2019 is $38,363. And public university fee, by the way, is actually surprising that it has shot up by $10,440. And if you talk about percentage increase in all this, it has been, can you imagine, median household income has increased by 568%, and median house price has increased by 924%. Average new car price has increased by 879%, and public university fee, of course, the number shows that it has shot by 2,550%. So this is a huge increase from 1971, and you can see how the median household income was only increased by 568%, while the house price and the average car price and the university fee has shot up by the huge margin compared to the household income. And as I said, in 1971, the median household income was earned by a single person compared to 2019. Now, in 2024, what happened? Of course, the inflation was there. After the COVID, the monetary stimulus was there. Everything was expensive. So in 2014, as we are standing right now, the median household income for the US family is $81,000. The median house price is around $430,000. An average new car price is around $47,800. Public university, for that matter, is now around $13,716. The percentage increase from 2019 until 2014 is 18% for median household income, 67% for median house price, and 25% for the average new car price. Public university, on the other hand, has increase of 31% in terms of the fee. This fee is for 1 year, by the way. Now, if I talk about one thing extra in this whole scenario, which I haven't mentioned before, let's say if we talk about S&P 500, which is the main stock market index for the US stocks, it was at around 85 points in 1971. It shot to 3,200 points in 2019. Then after that, if you talk about in percentage term, it was the increase of 3,665% from the period of 1971 until 2019. Now, if you talk about 2024, it's standing at 5,863, which is 83% from 2019. So it is a considerable jump from the last year. Now, at the same time, if I talk about gold, gold was at around $79. If you talk about 1971, it was a time when the gold standard was taken away. And then 2019, it was $1,545. There was a jump of 1,856%. And then it is around $2,650. In fact, while I'm making this video, maybe it has gone further up, and when this video is get upload, maybe it has breached the 2,700 mark already. The percentage increase was 72%. So you can clearly see that whoever has not invested their money either in any of the asset class, let's say a house, or let's say gold, or investing in the stocks, he would have just wasted whole time, because otherwise he won't be able to beat the inflation what has been happening. So in all cases, you have to invest in any of the asset class. Now, it's very interesting to mention something here. I just wanted to just show you quickly one chart which shows the total cost of the education in the US, and the components about the tuition and the rooms and boarding. In early days, the tuition cost was less, and the boarding and lodging was expensive. And recently, what we have seen since 2000, the tuition has the cost of tuition has increased compared to the room and boarding. So this chart is very interesting to see. Now, here's the thing: a lot of people will disagree to the stats and would argue in favor of their favorite investment class. I'm not here to defend any specific class here. I just have demonstrated that even a commodity like gold has given you some decent returns compared to regular assets. But cherry picking the dates for the comparison could make your analysis flawed. For example, if you see gold's long-term trend, you will see how it performed in last 50 years. In 1971, gold was trading at just $35 per ounce. By the end of the decade, it surged to around $360 per ounce. In 1980, a staggering increase of over 1700% was seen. This massive jump was driven by global economic instability, high inflation, and a loss of confidence in paper currencies. At that time, investors flocked to gold as a store of value. However, if someone had invested in gold in 1980, they would have been in for a surprise, as their investment would only return a break even in October 2007 after 27 long years. That's quite a wait. Similarly, if someone had invested in gold in 2010 after the global financial crisis, they would have seen gold remain stagnant for a decade, returning to the same value only in 2020, and in fact in 2021 following the COVID. All this while, the notion of gold being hedged against inflation and an asset which can provide better protection in times of uncertainties did not prove to be true. Nowadays, gold is once again the talk of town, as it has reached an all-time high, and many are betting on its continued rise. Now, having seen all these ups and downs of gold, I'm not a big proponent of the shiny metal. Instead, I tend to invest in assets which provide some kind of cash flow or productive returns. Now, you might be wondering how gold compares to newer assets like cryptocurrencies, maybe Bitcoin. While crypto has certainly gained attention and created wealth for some, it's important to note that its value has been largely driven by speculation. At least that's what I think so. Cryptocurrencies have been making millionaires, but at the same time, they have led to significant losses for the others. Um, Unlike gold, which has proven itself over centuries as a store of value and have some utility in terms of jewelry and industrial use, cryptocurrencies are highly volatile. They may have potential in future, but for now they lack the stability for me to consider them as serious investment class. The most important asset class that I believe everyone should invest in regularly, even in small amounts over the years, is the US index fund. When you invest in index fund, and by the way, this was proven to us by that table that we have seen, that the index or the S&P 500 was the actual wealth generator in the US, and you can do it even if you're in the Middle East by investing through multiple platforms that I'm going to talk about. When you invest in an index fund, you are essentially betting on the long term growth of the US economy and its companies. Historically, the US has been a powerhouse for global investments, and while there have been periods, sometimes even decades, when US stocks didn't show much movement over the long run, they tend to rise in eventually after some time. Even during periods of low economic growth, many companies continue to generate dividends for shareholders. This makes high quality companies particularly attractive when their stock prices decline, offering opportunities for value investing while still benefiting from the steady growth of the broader market. I would not recommend anyone starting new to invest in the stocks directly, but investing with index fund or ETF would be the ideal starting point. With compounding, for sure, your investment can do wonders. Now, let me talk about a few platforms here in the UAE that you can invest in for the US stocks. I always talk about a few platforms like Sarva and Baraka and even Interactive Broker. These platforms are the go-to place for me to invest in the US stocks. The reason is that these are non-CFD brokers, and I can be assured about their authenticity because these are regulated platforms. Interactive Broker is the biggest platform, I would say. If not the biggest, it is the huge platform across the world if you see for the US stocks investing. But for a new person to start investing, I would recommend anyone to invest with Sarva or Baraka, if especially they are based in the GCC countries, because these platforms are local, they are based in the UAE, and you can easily transfer the funds as well, and there is minimum friction to invest in these platforms. And sometimes these platforms create new campaigns, and for that, if whatever referral bonus you are getting, you might get double the referral bonus if you use my link in the description. Apart from that, as I mentioned before, there are other asset classes as well that you should be investing in, or you could be investing in. Sometimes people say real estate. I also invest in real estate myself, but there is another option. While you're in the UAE, you can invest in, or even outside UAE, you can invest through platforms like Smart Crowd and Stake, where you buy fractional ownership of different properties. Again, the link is in the description. You can use the referral link and get 200 or 250 dirhams of referral bonus through these platforms. I hope you like the video, and towards the end, I would like you to watch this particular video. I talked about interest rates, the impact of interest rates when they are increased or decreased. Like recently, they have been increased. I have talked about this in this video. Also, I talked about massive layoffs and how can you mitigate in this scenario of being laid off. I have talked about this in this video. I hope you like the video. Do let me know about the content of this video, and thank you very much.